Hey, this is TJ, the Backpack Trader, and I wanted to follow up with another short video. Our crude oil trade plan was just so amazing last week while the markets were melting down. The markets were crashing, but our crude oil trade plan, our day trade plan, was winning session after session, hitting its goals with 1 or 2 trades a day. And I've received a lot of emails asking me about it and asking me what happened next. What's happened since then? So I thought I'd run through some of the sessions that have occurred since April 4th, when the market was just nosediving into who knows where. And so let's take a look then at the very next session, which happened Monday the 7th. Now our trade plan starts at 8:50 New York time. There was a setup to go short here. Didn't trigger in. Instead, there was a long trade. So that was the first trade of the day. That one triggered in at 61.17. And you'll notice the entire trade is printed here with your entry, your stop, your targets. And it's shown here as well on the right edge of the chart, which makes trading so much easier once you've traded with something like this. You can never imagine trading any other way because the entire trade is planned. And you know exactly what you're going to do from start to finish before you place the trade. That's how we can prove the trade plan will make us money, which is essential to sustaining ongoing success. So let's just walk through today, Monday the 7th. The trade triggers in right here, gets long. Now, if we get to target 1, we're going to move our stop to break even. If we get to the yellow dot, we're going to start trailing, and the objective of the trade plan is to get to target 2. And then if we could do that, have a positive result, we quit. We quit with our power of quitting, and that's it. We're done. We go enjoy our day. So this trade didn't work out. Some trades do lose. Our goal is to win the session a vast majority of the time. So the trade comes down and it actually stops and reverses right here. And instead of stopping and reversing at 61.03, what we learn to do is adjust that down a little bit below the key level. So we're literally going to get short at 60.99. And the reason why is because we don't want to accidentally get short just to see the market go the other way. So we're trying to protect the trade we're in, but we're willing to cry uncle and flip over to the other side if the price just gives us a little bit more action to the downside to help confirm its commitment to go lower. Of course, nothing is ever 100% in trading. All we can do is stack the odds on our side, and this is a technique that's worked for us for years. So in this case, it does flip over right here, and it gets short. But then it comes down, keeps going down, and you can see the stop is moving down now and starting to trail, and then it hits target 2, and it goes a little further, and it hits target 3, goes a little further, not quite far enough to hit target 4, but the trailers come down, and it's come up and stopped out right there. So with 2 trades, we're able to quit our session with a winning result. Trade plan starting at 8:50, finally stopping out at 9:07, literally a 17-minute workday. So the first trade cut the loss by a little bit, maybe shaving 25% off of the total risk, losing 18 ticks, but then it made 26 ticks to target 2, 36 ticks to target 3, and the trailer picked up another 25 ticks. So clearly you can see this 2-trade session ended up with a winning result, power of quitting. On to the next session.